If you don't have USDT crypto or crypto in general, it's really difficult to fight your way out of that situation where all your funds are locked up, right? So like, it's like now you still have to pay lawyers, you still have to operate your business, and you don't have that cushion. That's what crypto is magically kind of, solves for a lot of business internationally.
Hey guys, we are here with Alex Alexandrov, the founder of Coinpayments. Alex, how are you doing today?
Good. Thanks for seeing me.
Absolutely. So, Alex, tell me when you first found out about Bitcoin. What was your aha moment?
Oh wow, 2011. Okay. And my aha moment was I was trading Forex at the time, and I really liked the openness and transparency of the order books and understanding of how the system works and having access to all the in-depth information that you kind of have restricted on the when you're doing Forex trading. So that was the first thing. I was like, wow. And the second thing, the aspect of somewhat anonymity, because at the time, if you wanted to buy like VPN or something like that, you always pay with your credit cards, and this just made sense to use Bitcoin. So I understood where the industry is going to go as a result of how quick and easy it is to transact in it, the benefit that it offers, especially cross-border. And then trading was like the thing that sold me.
Okay, so you were a trader by default, and you saw the, let's say, obscurity in the FX space and realized, hey, listen, if everything was on a blockchain, things would be much fairer, right?
Exactly, yeah. And then also did a little mining in the beginning. I just found it too cumbersome and understood that would have to be like a commitment to actual industry, and it didn't appeal to me as like the industry that I wanted to do. And that's why Coinpayments came about, because payment side actually made more sense to me. Custody payments, conversions, on and off ramps, all that stuff just was more of the things that I understand more.
Okay, so was it a like thing of, hey, listen, the market could use crypto payments, so why not create it, or?
Exactly. Well, the reason mainly for Coinpayments was I was at the time selling cables for miners, so like we see GPU riser cables and splitters, manufacture them in China. That was my first business in 2012.
By cables, you mean like physical cables?
Yeah, for miners, yeah. So we were selling those, and we were taking Bitcoin, and then there was no solution that took anything but Bitcoin. And then on bitcointalk.org, I found Coinpayments and was a 47th merchant, or 49th, something like that, on the platform. And then we started using it because it was the first one at the time that accepted more than Bitcoin. And then I was helping the business as a merchant. And then I ended up buying the business and developing it further, and then kind of stopped selling cables because this took off.
So, right. You saw the use case in accepting crypto payments and just said, hey, listen, I can make this so much better, basically. And
yeah, it was a lot of those factors. One of them is like the team that we're starting to get really close, because I was helping them develop it as my needs were, kind of overwhelming them a little bit, because we needed this, we needed that, because it was kind of like an experimental platform they built. And then I don't think they had the intention of making it a huge business. It was more of like an experiment that they were doing. And then I saw this needs to be like, a full-on business. And so we structured the company. The guys became shareholder and got rehired in the company. So we're still a team that works at the core business. We're the founders of it. So it became kind of the success story that it is now.
Awesome. So you've been in this space since 2011, the same time as me.
Yeah.
And
oh, nice.
What I often say is,
awesome.
Yeah, I remember BitcoinTalk.org. It was
that was the OG thing.
Exactly.
Totally.
The kind of thing you could only have a conversation about online back then.
Yeah, like the BTC chats and all that.
Exactly. The good stuff. But what I really noticed is that there's a massive difference between people that got into the industry pre-2017 and post. It's like
that was the second big wave. Yeah.
Exactly, right? So pre-2017, people were in this industry for the ideals of transparency, immutability, and then sort of the ICO days came in, and then money came in, and exactly the whole. So and back then, I remember like XRP was the antichrist basically of crypto, right?
To some, it still is.
How do you feel about it?
Same way.
Fair. How about meme coins? What's your take?
Look, it's kind of one of those things that popped up in the industry because obviously there's a demand for it. I don't fully understand it, because I usually invest into projects that are technologically superior and have a plan forward and a longevity, so that if I bought those things, whatever they might be, I forget and I don't trade anymore. I buy and hold, right? So, and with memes, that's not really a thing that would make sense. You have to like really be active and watch it, and it's kind of like trading penny stocks, right? That's what I would compare it to. So penny stocks is a great industry for people that are like hands-on traders and want to take risks. So it's a higher risk environment, which I think like is here to stay. It's just not my cup of tea, so I don't get myself involved in that space. I also think it comes with a humongous liability for people who are actually like producing those things, and I think it's going to be overly scrutinized by the regulators and everything else, because I think there's a lot of victims in the process. So I try to distance myself from things like that, because there's enough, what I would say, good, high quality, AAA grade things that you can, get yourself involved in, like, with what I would like to do.
Yeah.
And with this, it's kind of short-winded, hype-driven thing. Just like ICOs were, just like IDOs were, now it's memes, NFTs were, right? So it's one of those, like, every cycle we have a new, new terminology word that becomes a new hot thing. I think the next thing is going to be AI agents, and it's just going to, there's always that comes and goes type of thing, and it helps evolve the industry, and it's good for the industry overall, but
it's like
I still think the platform side is where I prefer to be.
Yeah, and I mean every hype cycle is followed by a culling cycle, right? Where
it's for guys that want to make some money quickly, right? So, and they're looking at that. That's not my need.
Yeah. And how do you feel about stablecoins, since it seems to be the year of the stablecoin coming in? What's your take?
I've liked them since day one. I think it makes sense from the merchant point of view. It allows people to stay in crypto. So the whole idea with Coinpayments is like we never really focused on off-ramping too much. I mean, we do it for some merchants, right? But that's not our main focus. Like a lot of competition of ours focused on that, and in some ways it helped them, in some ways it hurt them, because then you kind of walk into that whole banking regulatory environment where it becomes expensive, not only financially, but it starts to become bureaucratically taxing on the company and management and idea flow and everything else. So
it changes the ethos a little bit.
It does, right? Yeah. Now, I'm still like the crypto fundamentalist, like in a sense, like I believe that once the market is ready, you won't need to leave from this space. And I'll just give you an example. Like merchants of ours have been us for years that were originally rebuttaling, saying like, oh, you don't have off-ramp. I don't know if I just want to take crypto. I used to tell them, like, guys, if you take crypto, not 100% of your business is going to convert to crypto, because you still have credit card payments and other solutions, right? So you'll have like a margin of your business, like let's just say 3 to 5%, right? That's usually what we find for a big business that will, if they take crypto, will convert into actual sales in crypto. Very rarely it's above that. And if you don't exit out, most of those merchants made more money on this 3 to 5% that they took over the years than the entire overall revenue of the business years later. So they're really happy with me, and like that's kind of helps with client retention, because there's an argument I made, and it seems to be repeating each cycle. So the longer you do it, the better. And USDT allows them to also stay in crypto and gives them flexibility to pay cross-border. So that opens up. So for example, I'm not sure how, yourself and people who are listening to this, like, how often they send wires internationally. Like when you live in a certain country, you kind of don't notice the really big picture problem. And the problem is, like, if you try to send, like, let's just say like 20 grand or 50 grand, you might be able to get away with it a couple of times. But if you start sending like, that on a regular, the banks freeze your transactions. They come up with questions. They make it almost impossible to operate your business. No matter how big your company is, right? And people come across this in business a lot more than, let's just say, an average person would. So they don't realize the extent of that problem.
Yeah.
USDT solves that. USDT, all tethers, by allowing people to just basically rebalance their finances between entities globally and with their partners, pay contractors, and also when you have a situation where you might be under some investigation, or regulator will just shut your bank account, or bank will just freeze your assets, which happens quite a bit. And it's not necessarily because you're wrong, because they're just wanting to validate something, and it takes time, and then creates a bunch of issues for your business. If you don't have USDT crypto or crypto in general, it's really difficult to fight your way out of that situation where all your funds are locked up. right? So like, it's like now you still have to pay lawyers, you still have to operate your business, and you don't have that cushion. That's what crypto is magically kind of, solves for a lot of business internationally. And I believe that all big corporations should have crypto asset on their books and not in the banking institutions, because you've seen the trend of banking now also allowing crypto deposits. And I think that's my personal opinion. It's a disastrous way to store your crypto, because then you just give up the entire fundamental reason, right?
Not your keys, not your crypto.
I mean, they freeze your bank account because there's some transactions that are under question, but they also freeze now your crypto, and now you're like, what was the point, right?
It defeats the purpose.
You totally, yeah, exactly. So I always suggest that they custody it independently.
Yeah.
And a lot of them don't want to take the risk on all their assets under management. So that's why it was a long answer, but I think every detail there was important. So I think that's why for them, Tether is very important, because it allows them to hold that pegged value in still crypto format. So it still gives them flexibility and that risk tolerance.
Yeah. So no, I think you're sort of onto something there, and I think it's funny how the idea of crypto is to sort of hold autonomy over your own funds in the same way that people and now traditional companies are handing over that autonomy to other companies, like in the same way that people thought that crypto should be used for illicit and nefarious purposes, but then in reality they forget that it's done on an immutable, transparent ledger that lives forever.
It's a lot more transparent than cash, that's for sure.
Exactly. And one last question, Alex. So cross-border payments is a perfect use case for stable coins, but what do you think is going to be the next big blockchain breakthrough?
I believe subchains will be the next thing, because like the L2 game right now is pretty aggressive, but it's too expensive in my opinion, and it's kind of slows down the entry, and it requires a lot more financial involvement long term for the project. So a lot of people don't want to take a risk on their good idea, because they have to maintain and pay every month to basically maintain your chain. And subchains, which is something I'm also working on with my other project called Velis, and we're basically launching that. Right now it's in testnet, but I think in February we're going to be launching. We're allowing all these projects to launch their subchains where you don't need to pay gas in underlying token, and you have bridges to other blockchains. So that gives you the perception of your own blockchain, and you can also mine the transactions difference. So like whatever, if your token, you set the rate on your smart contract, right? And if it's lower than the underlying token, you basically yield farm your own transactions, and that will help you create a new funding mechanism. So instead of paying, that will allow you to generate. So you're no longer reliant on just investors' money or token velocity and growth to liquidate your foundational holdings in order to fund the project, which always has a limited runway. Yes. By allowing the transactions to expand and changing that focus, and I think that's going to be the future, because the industry should be focused not on pricing. It should be focused on drive of actual transactional volume, because that is the real metric of use case for your project. So if your transactional volume is growing, then you're doing something right.
Yeah.
Right now, they're measuring it by where you listed and what your price is.
Yeah.
And what's your daily volume. And that to me is like a bullshit metric.
Exactly. It's number of transactions.
And I think the future is once we break out of this, and whether it be me or somebody else doing it differently, that's the future that I need to see. Because I don't recommend everyone launching their own blockchain, because most people don't understand what it really means and how much maintenance and what it requires to do it. But we need to create a system where everything can be tokenized in a rational way that doesn't have that limiting cost factor and the taxation on the innovation, because now they have to focus on all this grilling work of maintaining it all the time, right?
Yeah.
And that's what's killing a lot of things right now. And that's why everything comes and go quick right now, because they have limited time to make the money, because they have a runway for investors, they have a runway on their foundational tokens. And if the market changes, you see like 90% projects disappear, if not more, and that needs to stop.
Absolutely. But just so I understand, like when we talk about subchains, are we talking like, let's say, like Avalanche, X-Chain, P-Chain, and C-Chain? That's that sort of structure?
Yeah, like ERC20 model, basically, right? Like, so basically it's a subchain, but without having to require on paying transactions in Ethereum and having more autonomy. So, and built on top. Like, I get pretty technical here, but I'm trying to make sure mass understands it.
Keep it nerdy, bro.
Yeah.
That's good.
Yeah, so like, you can introduce things like what Ethereum is doing with blobs, so you can handle data and keep it outside, but you can write it into the transactions.
And is this something that Velas can do?
Yeah, we're doing all of that now. So this is the big thing I've been working on for the last year to try to revive the project, because we had some incidents that took place over the last few years that kind of made us rethink our model and start over again. With a lot of a technology approach and how we're going to go, because of the last cycle ending abruptly, how it ended, and some
screw you,
mistakes. SBF. Yeah, that was a contributing factor. So with all these little things and big things, it all contributed. Plus mistakes have been made, and you got to learn from that.
Absolutely.
Right, life goes on. Blockchain's forever. So now I'm focused on finding a way to basically re-engage the market with something that I believe is the future. And like I said, whether I do it or somebody replicates it, doesn't really matter, because my job from day one in the space was to contribute and add value, right? Long-term to the entire industry, not so much only for myself. That's not my vision, right? Obviously, it's nice when I get value also, but even if I don't and people validate what I'm doing, I'm happy.
It's the best possible win. Alex, thank you so much for your time.
Of course.
Awesome conversation, man.